Hello and welcome to another update video about ADA. Let's first of all zoom out, take a look at the 4-hour time frame on the ADA chart. We can see here that the chart has basically formed visually a 5-wave pattern to the upside here into the middle of March highs. That was around the 80.5 cent level. So again, visually 5 waves to the upside, which we can already possibly with the green wave 1 call a complete 5-wave structure. So I've added it as an alternative already, I think last week, that 5 waves could be completed. Maybe from here wave 2 starts, it's a wave 2 pullback, but I will not confirm that until I see a break below 50 cents. I would really like to see another high before we do that, but the probabilities are fairly balanced here. I have to say that they are fairly balanced. It is possible that this wave 2 happens, like for example Link's wave 2 would happen. But again, it all depends on, do we hold in the next pullback the 50.5 cent level? Because as long as we're holding that, I would go with the perspective that this is just an A, B, C structure of wave 5, and the wave 5 of that diagonal doesn't finish here, or didn't finish here, that's just the A wave. But instead, it will finish here in this 85 to 96 cent target range. I have to say, though, just looking at it objectively, the move to the upside looks corrective. So again, probabilities are not great, okay? If this move to the upside showed any impulsive characteristics, I'm talking about the move to the upside from the March low, which formed here recently, then probabilities would be much clearer. But I have to say very objectively that this is not the case. So it's looking like a correction on the move up. But because it could be a C wave of that wave 5, I keep the door open for higher as part of a potential ending diagonal. So yeah, it's all a bit messy. I think if anybody is after a high probability setup, I mean, all I can say, we had our yellow support region, and anybody who used it to scale in would now be in profit. And then all you need to do is now manage risk, right? Like moving up the stop loss, things like that, okay? So that support zone worked. We just have to give them a bit more space because we're dealing here with a diagonal. But yeah, normally for a B wave, we say the area between the 78.6 and the 50% fib level. In the bull market, I added the 38.2 because most pullbacks have been extremely shallow. So that means basically if you just scale into this area, or had you scaled in, you would have had let's say, I don't know, maybe not quite 50%, but maybe 40% of your position filled, or 30%. So that's decent. And then it's all about risk management now. The idea is now that we could be the idea was that we might now, after this low, we might be in the C wave to the upside, and the C wave could be a 5-wave move, or it should be really, yeah. But the move to the upside is not impulsive. So the only way, in my opinion, how this C wave could unfold is as an ending diagonal, which is again not a high probability count. You can't normally trust these patterns. So I have, however, added a target area which was reached now. Okay, so we talked about that in the last few days. This sort of target area where I said, okay, at least, and I'm not entirely sure about this wave count, but at least we should get to 68 cents, which has been reached, because that's of this ABC structure, the 100% extension of the C wave. So I'm just tracking this now, and possibly we can still go higher. It would take a break below this swing low at 63.9 cents, 64 cents to indicate that some kind of a top is in place. Why? Because first of all, it's a structural swing low. We would re-enter the support area, and it's also the 50% Fibonacci level retracement of that rally that happened, 64 cents. So a sustained break below the 64 cent level would indicate that the top of sorts is in place. Further direct continuation higher, always possible in this C wave still, but then we would need to hold the 64 cent level. So what happens if we break below 64 cents? So first of all, I have no indication here that a top is in place, but my target was reached. So the risk is increasing now. but it looks as if it might want to stretch to 70 or 71.5 cents, my next upside targets here in this Fibonacci target zone. But if we get a pullback now and it breaks below 64 cents, then I would first observe if it might be a wave 2. Yeah, so the wave 1 can of course be an ABC structure, but only in a diagonal, which we said is possible in this move to the upside. But if we get a pullback, then I will add a support area for wave 2. But we have to be very mindful that if it follows Bitcoin's trajectory, which it might do, then it might just be a reset of this circle B. So that means the yellow support zone is still relevant. We've moved from support into resistance. The next pullback, yeah, I would provide a micro support zone, but if that breaks, the entire yellow zone is again valid for a reset of the larger B wave. But if we come down from here, I wouldn't have great confidence that the yellow support zone is holding. Maybe it will, maybe it will. And it's all about, okay, does this yellow C wave then? So basically the idea would be A wave, oh, 1 second. There are different ways of counting this, but maybe A, B, C. Does this C wave have enough space? And if we stretch a bit higher, yeah, it probably would have. So that's sort of what I'm watching here for the ADA chart. So primarily still watching for higher, first of all, against the 64 cent level. If that level breaks, the 50 cent level, but I'll probably be able to add another micro support area then, which will allow us to distinguish between the white count, where this would be a wave 2 pullback, and the yellow count, where all of this is still unfolding, very messy and complex correction. Yeah, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.